So we'll get started. I'll start by welcoming everybody that is slowly joining live. Today we have a very special guest, Mr. Bill Goodwin. And first things first. Sorry, I'm seeing all the messages coming in. I'm gonna have to close my phone. First things first, I want to welcome Bill, and we're gonna have, I'm pretty sure, a very interesting interview. Bill has a lot of experience, but I just want to come down a little bit to why we did this interview and how everything fit. A lot of people on the Facebook group asks, is anybody? One of the questions that I get a lot is anybody trading full time? Is anybody here able to do this full time? And Bill reached out to me at a certain time and said, "Hey Sam, if ever you want to interview, I'll be more than happy to do so." He was very kind to do so. And I told him, like, I have a few interviews back up, so it's gonna take me a little bit of time. And he was very patient. And when I reached out to him a few weeks ago, he was ready for the challenge. Let's do this. So Bill is a full-time trader, so I think that we're going to have a lot of people that are going to benefit from this interview. And I'm going to ask a whole bunch of questions that I already prepared. The live comments are available if you guys have additional questions to ask. And that's pretty much it. That's how we're going to do it today. Then also, before I want to start, I just want to say a quick thanks to all the moderators of the group that help to keep the group clean, to accept the people, make sure that we accept real people, not bots or any other people that want to do spam. And recently, when Bill announced on the other groups that he was going to do an interview with me, we got a bunch of people that wanted to join the group. So that shows to me that Bill is a very popular trader out there. So Bill, now floor is a bit to you. Welcome and thank you for your accepting this.
Happy to be here.
Oh, that's awesome. Thank you very much for joining this. So let's get started, Bill. First things first. I always ask these questions to the people that I interview. Tell us a little bit how you got started, maybe in options. When did you get started? How did you get into the options world, and when did you get started?
I was a really lifelong investor in dividend stocks for decades. Like most of us, had a job. I worked. I owned a small business in Toronto, and I would buy bank stocks and those types of things, and did that literally for 30 years. And it was a good experience. It was never a prime focus for me. And then a little more than 5 years ago, I retired and thought that I would spend a good amount of my time trading. And I had been exposed to the markets and thought that I was, reasonably intelligent. And if I didn't do crazy things, that I would be fine. But it turned out to be harder than I thought, of course. And I made some classic mistakes that many traders do. And I wasn't getting the type of performance that I imagined from being a dividend investor. If the market does 9% a year, returns 9% a year, I wasn't getting that 9% as a dividend investor. And then I started chasing dividends, high dividend stocks. Well, of course, that didn't work very well either. And I had known a little bit about options, but had never really dug into it. And when I did, it was such an eye-opener. You and I had a call last week, and we both had this wow moment that, wait a second, I can set, and I gravitated for whatever reason to selling premium versus buying premium. That was, without any real solid experience or knowledge, that intuitively to me seemed to be fantastic, that I could sell a call on the stocks that I knew, which were mostly dividend stocks, collect that dividend, or be assigned, collect the dividend, and then, or sell a put to get assigned, collect the dividend, and then sell a covered call. And my returns immediately started climbing. But I also realized that it required a lot more knowledge than what I first assumed. And I did okay, but going into the fourth quarter of 2018, I don't know if you remember that time period or if you were trading in 2018.
I was.
But the fourth quarter was pretty tough. And December in particular was really a difficult time for the market, especially Christmas Eve. On December 24th, starting when the market opened at 9:30, went like straight downhill.
Yeah.
And I had learned a lot, but not nearly enough. And that's when I really kind of dug my heels in and said, I've got to get serious. And that's what I did. And I spent a lot of time, literally, I think since that time, probably a couple thousand hours learning, perfecting my craft. And I talked to you about my trade plan, and that's when I started. I needed to document what I was going to do, how I was going to do it, how I was going to make money. And that was just a turning point for me in my options journey.
That's awesome. You that wasn't a planned question, but you just talked to me about learning, and you spent a lot of time learning. What was your how are you learning? Is it through books? Is it through classes that you joined? Is it through just out of curiosity? Because that's another question that a lot of new people join the group and say, hey, where do we start? Like, where do I start? I got this. I heard about this. Where do we start? So any suggestions that you have for the starters out there? Books maybe, or specific classes?
I did take a class, a couple of them. They were extremely helpful, but expensive, as you know, and time consuming.
Yeah.
And then I started spending much more time on videos and books. And I would say that they were equally beneficial to me, much more so than courses.
First book that comes through your mind.
First book that comes to my mind, this one, Trade Your Way to Financial Freedom. This is by a guy named Ben Tharp. He's a little bit like Mark Douglas in Trading in the Zone, and it was a great book.
Awesome, thanks. That wasn't planned, but that's awesome. I love these things. All right, great. So you told us that you've been trading full time for the past 5-6 years, if I'm not mistaken.
Yes.
Correct? Interesting.
Correct.
Walk us through a regular day. So you wake up in the morning, because you told me, like, some people think that trading full time is you go a little bit at the market open around 9:30, 10 o'clock. You take a break till 3 o'clock, and then you finish your day from 3 to 4. And I don't think that's the exact day for you. So walk us a little bit through your day, like a trading day. What does that look like?
It's setting up your trading day requires thought and thinking about what do I need to be looking at, how am I going to capture opportunities. There's nobody that's going to phone you and say, hey Bill, this stock is moving. I know that there are some Discord rooms and I tried those, but in general, you've got to set yourself up to be looking for opportunities. So I sit down at my desk. I'm up pretty early, 5:30 every morning, and I'm doing the things in my life for myself in terms of exercise, meditation. I'm out for a walk, pretty brisk walk every morning, and I do that because it's good for my health. But I also do it because I know that when I sit down at my desk and I'm going to start making trades, my mind needs to be clear. I take that pretty seriously. I'm not out at night drinking and coming in hungover and trying to to make trades with real money. It's just not my style. So when I do sit down at my desk, which is 8 a.m., I've got a routine that I'm going through, and I've got it printed off. Like, this is a page of things that I go through. I don't really need to look at it, but it's on my desk. It's part of my trading plan. So I'm looking, I'm a subscriber to Wall Street Journal and Barron's, and Seeking Alpha Premium. So I'm scanning those for stories. I'm a paid subscriber to Benzinga Pro. I don't know if you're familiar with it, but Benzinga Pro is pretty famous for news for the markets. And so I can sort my news a couple dozen different ways in terms of what I'm looking for. So I'm scanning that. I'm looking at movers, gainers, and losers for pre-market since 4 a.m. I'm looking at changes, and this is again on Benzinga Pro, changes in analyst ratings. That can really move a stock in the pre-market or even when the market opens. So I've got a set number of things that I'm going through, looking for things that are either affecting trades that I've got ongoing or potential new trades.
That's great. So let's talk a little bit of what percentage of your portfolio is dedicated to options only?
100%.
So you're 100% options. I was hesitant to write
options. And while this may be jumping ahead, I don't trade to own stocks. In reality, I'm just borrowing them. I don't have any long-term trades whatsoever. I want to end this year and every other year with no stocks in my portfolio. I collect premium. If I do it, that's it. That's all I do. I collect premium. So often I'll be assigned. I do a lot of wheel trades. I think you know that.
Yeah.
But at the end of the day, I want that stock gone. I want to make my put premium, my dividend, my covered call premium, and either once, twice, however number of times, but then it's gone.
Very interesting. So 100% is only for that strategy. You sell their puts. If ever you get assigned, you sell those cover calls, and you want to be in cash all the time, as most as
that's
possible.
Right. That's
great.
Right.
How many trades approximately a day, just to give us an idea? Because on the previous questions, you say, I trade, I'm there to trade. So normally, like on average, are we talking here 20 trades a day, 10 trades a day, 5 trades a day, like approximately?
Well, I can average it out per day, but I believe in subscribing to the thought of I'm going to trade when opportunities are there. So I don't have a set number of trades as an objective per day or per week. When vol rises, the market drops, like last Monday, vol is going up. That's when you want to do a lot of trades. If you're selling, if you're selling premium, those are the days that you wait for. But on average, last year I did over 2,000 trades. This year I wanted to tone it back a bit. I brought it down to 1,800 trades, which is 150 trades a month, 21 trading days. So that you get an average of 7 a day. But I don't set my day by that. Oh, I did 7 trades. I'm finished working.
That's not your goal. That's not your goal. I need to do 7 today. You just see what are the opportunities and you jump in. Okay, let's get in a bit more into details here. Are you mostly weekly, monthly? I'm a 45-day days to expiration kind of trade. I like to do those trades like that. But what do you do? What's your favorite, or it doesn't matter? Like, do you only look at premium? Like, how do you kind of look into that?
I don't have a favorite. I'm doing anything from 1 DTE. I for a while I did 0 DTE, but I didn't like it that much. So I anywhere from 1 to 80. But two common areas for me are a 14 to 20, that range there, DTE, and also a 40 to, let's say, 55. Those would be the two main groups that I'm trading.
Great. Okay, so there's people starting to ask questions here. Favorite ticker, or what's your, let's say, your top 3 underlying, because these are the usual suspects. I guess they're always the same companies that you go over and over again. What's the, do you have like 2 or 3 usual suspects that you prefer trading on?
I don't have 2 or 3 because I have 3 buckets of 3 watch lists. Kind of blue chips. There's 250 of those. The mid cap to large cap stocks that I wouldn't consider blue chip, that have an IV of 25 to 40 in that range. There's 200 of those. And then high IV stocks that run from anywhere 30 to 100 that are mostly the smaller caps, tech stocks, those types of things. There's 150 of those. So my universe is 600 stocks. So, you know, do I have things that I'm often trading? Yes, but there's not 3 of them. There's 30 of them, you know, and it's all the ones you know, right? It's Apple, it's, AbbVie, like all those, but I don't have 2 or 3, no. And I want a large universe, but what I don't want, and the reason that I've got a set number is because I really dislike this kind of FOMO trading. Something's popping up on the screen that I've never seen before, and it's climbing, and everybody's jumping in. I belong to quite a few groups, chat, WhatsApp groups, and Messenger, and Facebook, and I see everybody they're diving into this, and that's what I don't want to do, because I believe in technical analysis, and I love technical analysis, but I also love fundamentals. And I refuse to trade something I don't have a clue what it is. I have no knowledge about their management, their products, blah, blah, blah. So I have this set number of stocks. And if I want to add to that list, I've got to take something out.
Oh, okay. Okay. I thought you were going to say, if I want to add to that list, I need to look at the fundamentals before. I need to understand.
I do.
And then on the next opportunity, I'll go in.
Well, I'll go into a trade as long as I know what I think I need to know. But I have to add it into my list, into my watch list.
Very good. Questions are popping up like crazy. So Chris is asking here, what broker do you usually use?
IBKR.
IBKR. I think Chris is also an IBKR big fan. Do you ever sell spreads from Raj?
Often.
Very often.
Probably my number 1 trade is a bull put spread.
Bull put spread.
And the number 1 reason is because the annualized return is higher on a bull put spread than it is naked.
Interesting. Okay. I've never really
and I never get into a trade without knowing my annualized return before I hit the transmit button.
Oh, that's very interesting as well. Okay, and is there a minimum requirement for you to press that enter button?
Absolutely. I have a long checklist. If I'm only making 7 trades a day and I'm working, like 8 hours, so I don't need an hour to go through the checklist. I only need 5 minutes. But there's a lot of items in there and guidelines that I'm looking to receive as an annualized return. So if it's a 7 to 14 or 21 DTE, I'm looking at anywhere from, generally, based on my portfolio margin, and I don't know if you're familiar as a Canadian with portfolio margin, it's very different from what Canadians usually can get. So I want an annualized return of 100 to 250 for a short DTE, an annualized return. On a longer annualized return, I'm looking for a minimum of 75% all the way up to 150.
Okay. So we have high numbers like that because the way you calculate it is, let's say you only need to put 30% of the whole of the stock. You still it increases
Exactly.
that margin.
It's absolutely right. It's the, my method of calculating is the
Right.
amount of margin that I'm using to get into the trade.
I got it.
Because I'm a portfolio margin trader. Margin is critical to me for what I do.
Yeah, I use margin too. I totally understand that. Lots of great information. Okay. Chris, again, with a question here. When you trade for premium, do you use a stop loss?
I have a mental stop loss. I do not use program stop losses.
I like that.
My best stop loss is make the right trade in the first place. I don't chase Momo stocks. I don't chase high IV stocks. There's no SPACs or marijuana cannabis stocks in my 600 universe. So the trades that I'm making, I think, are intelligent trades when I get into them. And they're all names that they're all great companies. So if the market dips down one day or earnings come out and for that day IV skyrockets and I'm like 3 times my premium, you understand what I mean by 3 times my premium. That sometimes is a trigger to get out. I'm going to look at the situation before I get out. I don't want something programmed kicking me out of my trade.
So ideally, what would you say? How many trades that you have that expire worthless? Like, what's the percentage?
Probably on an ongoing basis, I'll have about 200 live trades.
Okay.
I would say that the expiring worthless is probably 25%.
So what happens with? Sorry, I didn't want to
the
interrupt.
largest the largest group, which is probably 65 to 70%, probably 70%. I'm getting out with somewhere from a 50% to an 80% profit. So my ideal situation is when I'm getting, I've sold premium for $1 and I'm getting out for 10 cents or 20 cents. That's ideal for me. If it's gone to zero, it's happened just because it just happened too fast. Sometimes that, you get into a trade and bang, 10 days later, it's at zero. You had no chance to get out. But I prefer to get out if I can.
Okay. And let's say you reach that 80%. So let's say you got a dollar premium and now you could buy it back for 20 cents after 5 days. Boom, you do it, right? That's money.
Absolutely.
Yeah.
5 days, 50, 60%, I'm out.
Okay.
On a 45 PTE and you're reaching, 70% of profit after 5 days, the smart thing to do, take that money and put it back to work.
Right. Chances are that it's going to drop pretty fast as well, eventually.
Let me continue. Go the other way. You end up being a loser if you didn't get out.
Okay, so we have the question here. And I'll ask it a bit differently. So the real question is, what's your trading capital and do you have a monthly income or you're trading that you target? So let me ask you this a little bit differently because I don't like going into too personal stuff. The income that you get from that premium, how do you divide that? Like, let me give you an example. Do you say, well, 50% of that premium that I receive, I reinvested. The other 50%, I'm a full-time trader. I use it as an income to, pay my bills, buy my grocery, whatever, do whatever I want to do. Is there a specific way that you kind of manage that or not really? Tell us a bit more about that.
Well, that's a great way that you framed it. And the percentages aren't that far off. I have no other income. I ran a business, owned and ran a business my whole life. I have no pension. I didn't work for the police department or some government agency. So I do use what I earn to help fund living. It's significantly less than 50%. I want to contribute to my capital every year significantly more than 50% of what I earn. I want the majority of what I earn every year or every month to contribute to my capital.
Okay.
You know, that's the magic of compounding, right? You grow your account, it compounds year after year, and it works. In answer to capital required, my own personal experience is that you need at least 5 times the amount of money that you want to earn in premium. You should have 5 times that amount at least in capital. So if you want to make $50,000 a year, you need at least $250,000 in capital. And that's a minimum number. I see many traders in your group and other groups that are talking about these fantastic, you know, I'm getting 50% a year. You know, God love them. Like, that's excellent. I personally can't do that. I can't achieve that. And when the market tanks, like it did, for example, in December of 2018 or in March of 2020, you need a lot of capital to go through that.
Right, to kind of just sustain, to get your head above water. So just when it kicks back in, you're ready and you take advantage of that.
Right, and when you're a trader, especially using margin, nothing is more important than protecting your capital. If you blow up your account and lose 50% of your capital, you are in serious trouble. And if you've got a long-term plan to be a full-time trader and you've exposed yourself to losing half of your account in a week or a month, you know, it's going to be difficult to be successful for the long term.
So that's interesting because there's somebody that's asking a question around that about, sorry, I lost it. Okay. Can you walk us through or give us an idea of what your risk management process is? So how do you protect yourself? How do you protect that capital? Do you buy puts? Maybe not. I don't think you're a buyer. Maybe you are. Or what do you do to kind of protect that capital?
First off, the trades that I go into are conservative trades. You know, I'm not chasing Wish or you know, WISH. I don't know if you're familiar. I'm not chasing some of these SPACs that have, you know, when Nikola was going crazy and, you know, Ride, you know, Lordstown Motors was going up and the premium is fantastic. I'm not doing that. You know, I'm using conservative trades. I'm using deltas that generally run from, you know, 10 to 20.
That low, eh? That's interesting.
That low. That low.
Okay.
So you know what my hedge is? My hedge is the trades that I get into. Because if the market tanks by 10%, I'm fine. And I calculate that in a spreadsheet. I keep a very detailed trade journal in Excel. And I know all the time how much margin I'm using for each trade. And I've got guidelines to tell me whether that works in what my guidelines are. I also keep a cash journal every day. I know how much cash I've got, how much margin I'm using. You know, I've got a bunch of metrics that every day the market closes, the first thing I'm doing is getting on Excel and putting those numbers into my spreadsheet. Every weekend when I review my account, I'm looking at what is my cash right now, which is defined as excess liquidity over my total account. And I set a target for where I want to be next week. Lately, awesome. I've been at 65%. I'll go down to 40. If the market tanks, And I think that I'll let myself go down to 40, but not 1 point below.
So what happens if it goes below?
I immediately
what
stop
happens
trading.
You're at 40%. You stop trading for and then you manage your.
I would immediately
your
stop trading. Nothing like that. From my experience, 40%, I can manage easily a 10% downtrend. If I was at 40% and the market dropped 30%, I'd be in trouble. At 40% cash. So I never go below 40. Joe mentioned. I just saw the comments that 7 times is better versus 5 times, and I agree with him. I sometimes I feel a little bit nervous about the 5 times. I can manage it. I'm pretty experienced at managing my account, but for new traders, they should have more cash available.
I like that. So that's Joe Chien that you.
Yes. Yeah.
Yes.
Very experienced.
Joe is asking also, Bill, what are the underlying 600 stock universe? Give me some examples. Oh, there's some people, ABBV, Apple, NGA, bank stocks,
yeah,
a few names.
All of those. Like, I'm just gonna, read off a list. And honestly, I don't think it's very helpful. Like, BAC and C and CRM and CVS and CVX and Dow, Con Ed, ENB. Like, there's so many of them that are even in my core list. So, naming those off, I don't think helps anybody. No offense.
No. I don't think anybody's taking any offense here. Okay. Maybe this is an opportunity here. So I have another question from Chris. Can you give us a summary of those rules on that sheet you go over before entering a trade?
Sure.
I'll let you answer. Sure. Maybe I'll add something funny afterwards.
Sure, I can. I as you know that I've talked about, I have this trading plan. It's 32 pages. I've got rules specific to all trades. I've got checklists. So was the question about checklist or rules or both?
So I think the question was more about that routine, that sheet that you showed earlier, that routine that you have in the morning.
Oh, my daily.
Yeah, your daily routine. I think that's what Chris was mentioning.
Okay. So, I'm going through all my Benzinga Pro headlines. I've already gone through Barron's and Wall Street, the Wall Street Journal. I'm looking. I have a program or an app called Black Box Stocks. I don't know if you know about it.
Never heard of
it. Great app for unusual option activity. So when you hear John Najarian or Pete Najarian on Halftime Report, they're reporting unusual activity. I can find that same unusual activity on a program called Black Box Stocks. So I'm also looking for all of the earnings that are coming out this week. I have a calendar, and that calendar is automatically updated pre-market, post-market of what earnings are going to be announced. I'm looking at all of the analyst changes that are happening that day, that morning, that are coming out. I've got a list of trades, a short list of trades that I'm thinking of doing. So I'm looking at the charts in the pre-market action. What's the price action on those trades that I'm thinking about placing today? I've got a number of scans, and I have a program called TC2000, which is a little bit like TradingView. I don't know if you're familiar with TradingView, but yeah. TC2000 for me is a better program. There's a lot of built-in scans in there that I go through. I'm going through my watch list. Those 600, those 3 baskets or buckets that I talked about. I can sort those watch lists in a lot of different ways. So I can bring up the information that I want this morning. So there's really a lot of things that I'm going through.
Good. I think
as the market opens and we progress.
Awesome. A little commentary. This is not a question, and I'm going to read it out because I think it's important for everybody to understand that they need to be comfortable with what they do. So Joe here again says, one thing that Bill and I differ is that he accumulates stocks. He likes to accumulate stocks, and he doesn't want to be in cash. He wants to have stocks. And you know what? That's fine as long as we're comfortable with how we're trading and we sleep well at night. There's no good or bad way here. So.
Absolutely, and I want to reinforce that, Sam. You know, I'm in a number of groups. I have a small group of friends. We have a Zoom call every Sunday morning. We spend an hour and a half together of really experienced traders. And each one of them are doing different things. You know, one of the traders does a lot of zero DTEs. He's fabulous at it. That is the majority of his income is through that. But he also holds a lot of stocks. That guy is up 55% this year.
Awesome. Good for him.
He doesn't do what I do. You know, so everybody has different approaches to the market and can make money. It doesn't make one right or wrong.
That's the point that I wanted to bring. And the other point is you need to sleep at night. If you can't sleep at night because you're stressed at what you're doing on the market, just don't do it.
Right.
So that's why I wanted to read that Joe's comments. All right, Jim. Jim is asking, what did you do when the market tanked in 2018 and lessons learned?
Well, you know, first of all, I have this guy that, you know, I talked about my amount of cash that I keep and what I project for the next week. When we're at market highs, as we were in February of 2020, I was already at over 60% cash because we were at market highs. So that's just one of my rules. Market highs, I start to bring it back. And I want a higher percentage cash. I want to be doing less trades. That was a factor. A much bigger factor is that, you know, I've spent a lot of my career dealing with China. I was in China during SARS.
Okay.
I knew intimately what was what I felt was going on. I knew that it was a coronavirus just like SARS. So, you know, well, we had, you know, the U.S. government telling everybody, we got this, you know, it's not coming to the U.S. And my mind was saying bullshit, and I was telling my friends and family, get ready. This is going to be terrible. I started shorting. I got out of all my long positions. I started shorting. I made more money in March of 2020 than I've ever made.
So are we in the market high right now?
Absolutely.
So meaning that you're around 60% cash, 40%
65.
trading, you're down. 65. Okay, so you're scaling it
65.
down.
You know, I'm still trading. You know, it's not my style, just, you know, stop. I'm not, you know, I believe that it's a market of stocks. You know, it's not I believe that, you know, it's not a stock market, it's a market of stocks. So, you know, for example, you know, on early in the week, you know, trades like SoFi, you know, I'm very bullish. You know, you interviewed Jason Hartman, you know, yes. Fantastic trader. And, you know, Jason has been pounding the table with me, you know, SoFi. So, you know, I think that there's always opportunities out there, but I am in a very cautious mode.
Very good. All right, let's take a look at other questions here. One from Kara. Do you wait for drops before selling puts? Does it need to drop before you sell the put, or not necessarily? If you see that the technical analysis is looking good.
You know, absolutely. You know, it's both. I prefer to wait for my moment. You know, when I've got a short list of trades that I want to do this week, and I prepare that on Saturday. And so, you know, I want to pick the right day. I want to pick the right moment. You look at any chart and you're getting some fluctuations. So, you know, for example, you see a channel and the stock is going, you know, from the top of the channel down to the bottom channel. When do you want to sell a put? At the bottom of the channel. So I am trying to do that. I'm not always successful in doing that, but certainly it's on my mind. But if there's a something that's going on, it's very bullish. I got into a firm, AFRM, and it was clearly going up. So I wasn't waiting for a pullback in FRM. I jumped in both feet. But I'd like to mention, this is really important. I adhere to position sizing religiously. I have a set amount of premium that I sell in every single trade. I do not subscribe to, oh, I'm really bullish on this, I'm going to sell $800 in premium, and this one doesn't look so good, so I'm only going to sell $80 in premium. I don't do that. Pretty much every single trade I make has an average premium, and I have a limit, and I adhere to that limit. So if I'm in the trade, it's in that average range of premium that I'm selling.
I like that. It's a similar way of, let's say you have a big portfolio of and you want to have 5% of your amount of on each stock, for example. So you're going to have 20 stocks at 5% each of your. So for you want to have the right balance, but you see it with premium. You kind of do it with premium, and you want to say 5% of my overall premium that I'm going to make this week or this month goes to SoFi. I'm not going to put 10% or 20%. That's too risky, or a firm or whatever. A firm, by the way, dropped a lot on Monday. I saw, and I felt like going in. I kind of regret not doing so. But
I think it closed at 128 on Friday.
Yeah, I went. Yeah. Anyway, so great. Let me continue. How are we doing with time? I think we're doing okay. Yeah, we still have some time. John here says just a comment that he likes to scan for low RSI to sell some puts. So he looks at a stock that it has a low RSI, then he sells the puts on those. That's interesting.
Our RSI is in my checklist. When I look at going into a stock, I want to know what the RSI is. I want to compare that to the sector also.
That's interesting.
But our RSI is just one of those analysis, and I love looking at correlation. I want to have correlation between indicators and fundamentals that are telling me, we're directional traders. Often, I do straddles and iron condors, but most of the time we're directional traders. So I want to be looking at all of those things in my checklist to make sure I get the direction right. And RSI is one of them.
So, okay, you just mentioned something for me that kind of triggered another question. So you said that you like bull spreads. You said right now you spoke about straddles. You talked about iron condors. What makes you decide what strategy to pick? And I know there should be a lot of various like outside elements, but in a nutshell, like why would you do an iron condor on a specific stock versus a straddle versus just selling a put or a call bull spread? Like what? I know it's different strategies for different directions of the stock, but walk us a little bit.
It's not that difficult of a question. When I'm looking at any trade, and I'm first of all, I'm deciding, do I want to be naked or do I want a vertical spread? Do I want to spread or to be naked? The number one answer that I'm getting either is, I'm nervous about the market. I'm doing more bull put spreads because it has insurance. But I'm also looking at my annualized return. So I'm making that first analysis of naked versus spread. So then the question is, spread on one side or both sides? If it's a strangle, right, it's one side or both sides. If it's an iron condor, so if a spread is not proving to be the right choice and I'd rather be naked, and sometimes that may be because I want to have the flexibility of a naked trade versus having a spread. Spreads can be a little more difficult to manage. And they certainly are more difficult to roll. And I roll. Like if my thesis is correct, I'm rolling until I'm profitable, no matter how long it takes. But back to your question, why an iron condor? Because I want every trade I'm going into, generally, I'm, I do bullish trades versus bearish trades. And I'm doing much more bull put spreads than I'm doing bear call spreads. Because the market in general goes up.
Right.
So, generally, if I'm getting caught, it's more often on the call side than the put side. But if there's enough premium, certainly the annualized return on an Iron Condor sometimes can be great because, the margin required, if you're doing both sides, you don't need near as much margin because the broker sees that you're both sides. They don't need to cover as much margin on both sides because one of those sides is going to win, right? Like only one's going to win.
There's only one possible scenario, so that's why they only take one side, not both sides.
There's two. You can win on both sides, of course, an Iron Condor.
Right.
But you're not going to lose on both sides. That's impossible.
You can't lose on both sides. Right. You only lose on one side. Worst case scenario. Okay, so let me get that straight. So let's just give an example of Affirm because we spoke about that earlier. You look at your charts, you look at your stuff, you look at Affirm. Oh, that's a great stock. I want to get into it. Is it after that you kind of decide, okay, what's the best strategy? Do I just go naked on this one? Do I go my Iron Condor? Do I do a strangle or straddle? What do I like? Is that how you kind of?
I don't even have to think about that one because I know that I don't want to be exposed on the call side. That stock could explode, right? It all started with the Amazon news.
Right.
But they've got a deal going with Shop already, which happened before that. But if they sign another, major name, like Nike or whatever, that's in retail, that stock could go to 200. So if it's a high IV stock that I know can go up quickly, I'm not going to be participating in the call side. So I don't do a lot of Iron Condors and strangles because of that.
Smart answer. Okay, let's continue. Marius, how was your performance in terms of percentage when you did buy and hold dividend stock before you became full-time trader versus your performance right now or in the past 5 years?
Well, it's an easy answer. I in my years of being a dividend investor, I probably had a range of years of 5 to 10%. Now my average is in general 2% a month, annualized 26.8% a year. Last year I beat that significantly. I never could have done that. I never could have had a 35% plus return in a year being a dividend investor.
It's funny because I think it was with Jason's also interview. A lot of people, it's the same. A lot of the traders have that same path. They're big dividends. They love their dividends. They love that income. But then when we discovered the options, we're like, oh my God, this income could be so much bigger. And instead of waiting 3 months to get a dividend, we could get it monthly, weekly. It's crazy. There's so much. I think this is a common path that option traders go through. They go through the dividends first, and then they discover options, and then that's the big boom in their head. Oh my God, this is great. I wish I could have known this before.
Absolutely, and even if you're going to do this part-time, if you are experienced and intelligent and work hard, achieving a, let's say, 12 to 15% annualized return in your portfolio using options is reasonable. It's a reasonable target. You're not going to do that every year with just solely dividends.
All right. What else do we have here? Locke is asking us, what's one thing for a beginner to learn about options trading?
What's the one thing to learn?
What's one thing to get started, I guess, for a beginner to learn about options trading? I guess a lot of reading books about options, how they work.
Absolutely. That we've got to assume that if you're looking at options, you already understand the stock market. You just can't like, I'm going to start with options tomorrow, and I've never traded a stock in my life. Like,
No.
that's a recipe for disaster. You've already got to have some experience in the marketplace. And the number one advice, not about learning. Learn how to be conservative. Learn how to be disciplined. Learn how to be patient.
I love that.
Learn how to control yourself. That's
Not
what's
be
going
greedy.
to keep you from losing money.
That's a very good advice, because I've learned how to do options, and I went through a phase that everything was going well, and I became greedy. And when you start becoming greedy, the market gets back at you. It's
Right.
crazy. I take that as a big learning. The same way as I would go to take a university class and you have to pay. Sometimes you kind of learn, you have to go through that process to learn a little bit in the market. But I really like that advice.
Agreed.
All right. Okay, cool. Okay. If the underlying, so another question from Joe here, if the underlying doesn't move around too fast, trading options against dividend stock is extremely profitable. Okay, that's not a question. That was a comment. Great.
Good comment.
Yeah, good comment. John, does Bill do most of his trading in RAs or cash accounts? I don't know if that's a personal question.
It is a personal question, but I only have, all my funds are in a cash account.
Cash account. All right. One argument is that option selling is good for an up market, but it's a disaster when it downs. Your thoughts around that?
Well, I don't think it's I think that it depends on what are the trades that you're doing. I read about people having disasters in their account, and the reason that it was a disaster is because they were selling at the money puts on Nikola or Ride. Like, it all starts with the trades. If you're doing conservative trades and you're position sizing, meaning that even if you're a small part-time investor and you only have a $25,000 account, you've got to spread that money over a large, the largest amount of trades that you can. And, not putting it all in and the market drops and you're killed, because you weren't conservative in your choice of strikes and deltas going into the trade.
And if I could add something to your comment, and correct me if I'm wrong, Bill, not only you have conservative trades, but worst case scenario, if they go wrong for whatever reason, the beauty about options is rolling, like you mentioned before. You always have that possibility to readjust, to kind of buy some more time. And this is another thing that I love about options is you have that possibility to kind of readjust if need may be.
As long as you have cash in your account, you can do it.
Good point.
When you roll, an IV is going up, and it's going to require even more margin to keep rolling that trade. When you run out of money, you can't roll anymore.
Yeah, you're going to stop there, and that's going to create more problems. Good. Craig, there's a lot of FUD going on in the market today, and I find that it impacts how long I stay in a trade. How long did it take you to conquer your nerves or the psychological aspect of trading? Good question, Craig.
Well, I think that it depends on where you're getting your news from. If you're on Facebook, this group is great, and a lot of groups are great. But it's social media, and right. if you're making trades and making decisions when to get in and when to get out solely based on social media, you're in big trouble. You've got to have quality news sources, and you've got to have some common sense about you as to why am I getting into the trade and why I'm getting out of the trade. So
have the right plan.
You have the right plan. I personally am not that affected by the BS that goes on out there, because I'm looking at quality information, I'm making conservative trades, and once my thesis is decided, I'm going into AbbVie or J&J, or even some smaller companies that I'm trading, like Rocket Mortgage is one. DraftKings is another. It's a high IB stock, but I can trust the information coming from management, for DraftKings or Penn National. So I've got some higher IB stocks, but I do trust management, and I'm going to listen to what they have to say. I'm not going to listen to some guy on Facebook that is making some assumption. So I hope that answers the question.
I'm telling you right away, don't. If ever I post one of my trades on Facebook, be careful. Don't do your due diligence.
Yeah.
Just a question that just came back that I wanted to ask you before and I forgot. You mentioned earlier that you worked a lot in China, or sometime in China.
I did. I lived there for over 12 years.
12 years. Yeah, I think you mentioned that to me on our first call. Is there a lot of, since you have the experience there a little bit on the companies and on the culture and all that stuff, is there some companies that you like a lot trading from China as well, or you concentrate more in the US?
Currently, I did enter into some trades in China. When all of this started back in July, with President Xi, clamping down on EDU and TAL, that was one of the first sectors. Stopping the BABA and IPO. I got out of over half that day. I reduced my risk. Today I have zero. I do not want to be in any China trades. I think that it could be an opportunity. I've got Jonathan Creador. He's a great trader. He's in Toronto. He's accumulating BABA right now. It may be a good trade, but you've got to remember, these ADRs out of the Cayman Islands, you do not own a share of BABA and BABA profits. So you really got to understand what you own here in some of these ADRs out of the Cayman Islands. You're not buying shares of those companies. And the Chinese government has repeatedly said over and over that this is not a legal structure according to the laws of China. That's clear, word for word. So, what more evidence do you need?
Right.
Plus, we've got an American government who's saying that they've got another 2.5 years to go before they have to comply with U.S. laws of financial disclosure. But that's against Chinese law. The Chinese law will not allow those companies to divulge that information. So, this is not a good recipe.
Yeah.
It may be a great opportunity, but it's a lot of risk.
So I don't consider myself a big trader. I'm still a small trader, but I totally agree with you. I try to avoid. I'm into some trades right now, some Chinese stocks that went down quite a lot because the government went in and had their say in it. I should say, but so me too. I'm very cautious of. And maybe I'm missing out some opportunities, and that's gonna be my bad. But I prefer, since I'm a small investor, I prefer putting myself in U.S. only, and that's it. My 2 cents, my opinion. All right, John. I think you already answered that. So John says he most of his trades 19 to 15 days. DTE. What about Bill? So you did mention that you have 2 buckets. 30 to 45 and 9 to 15 as well. But I'm not sure. I'm correct.
Correct. And I will do at times of really market lows, which I'm waiting for. It may happen. I don't know this year. We may get another, a serious 10, 15% pullback. I will start buying leaps. I will go long options at that moment.
Jeanette, one of our who helps a lot on the group.
Jeanette loves Apple.
Yeah, she loves Apple too. That Apple Howard. So Jeanette is asking a question. She says, "Why not owning stocks you believe in and sell cover calls on it? For example, Apple."
I do, but my style, my preference is if I'm going to acquire the stock, I want to do it through assignment through a put. So now I own it. I'm comfortable with that. But I sell usually at the money or close to the money covered calls. So, Apple's 145, I'm going to sell a 150 covered call, or maybe even a 145, depending on my sense of where the market is going. I want that premium.
Okay, so sorry, let me interrupt you there. Sorry, Bill. Scenario here. Apple's around 147 now, 145, 147. Yeah. You do a cash secure puts, for example, like you said, around the 20 delta. Okay, that could be maybe what 138 to 139, for example. No, that's all you do.
Sorry, did you say a cash secured put?
Oh, yeah, you start with a put, selling a put.
Right, I'm selling a put, often close to the money or even at the money. Okay. So if Apple's at 147, I'll be, I could sell maybe, depending on my sense of the trade that week, but I would sell a 140 or 145 put. Okay. Because I want that premium, and I get a sign.
Okay, that's where I wanted to get at. So you get assigned, and your strike price was 145, for example, and now the stock today is at 139. Does your cover call? Do you sell it at 145, or you take the loss on the capital there, or like how do you manage that?
If I was assigned the stock at 145 and now it's 139, and it's Apple, right? It's not another stock. It's Apple. Right. So I'm probably going to sell in that situation a 45 DTE, a 145 covered call. I'm probably going to choose the 145 covered call at that. If it's Apple, and we're only talking about 145 down to 139. If it's 119 or 129, I'm going to try to sell a 145 call and I'm going to get 10 cents. Like, that's really not going to help my break even move down.
So what do you do in that scenario? You get out of this. Do you get out of the stock and just go elsewhere, or you sell?
It would depend upon my thesis for why I got into the trade. Apple's had some pretty big pullbacks that have been extended and lasted for a while. And just because we've seen this chart go like this in Apple for the last 24 months, doesn't mean it's going to continue, and doesn't mean that we can't have another pullback in Apple. So, it would depend upon the market, but I am not adverse to getting out of the trade, selling the stock, taking a loss, whatever it is. I think a big part of why I succeed is because I'm not afraid to get out of trades. I get that I've got a line in my trading plan that says if my spidey sense goes off and I don't even know why I don't like this trade anymore, that's enough reason for me to get out. It just doesn't feel good anymore. Just get out.
Right. And that's where I still need to learn. I think that's where I'm at in my learning curve with options is, don't get emotional. This is not a member of your family. You just get out of it, cut your losses, move on. That's what I'm trying to learn right now.
Sam, I love to tell myself over and over that my style of trading is very mechanical. That's what I want to do. I want to be mechanical, I want to be disciplined, and I want to follow my plan. I want to follow my rules, because when I do, I succeed. If I don't, I lose.
Yeah. Good point. All right, Jeanette. So I think we answered your questions for Jeanette. We're just gonna ask a few more here, just in essence of time. And this has been very popular interview. A lot of questions, a lot of people that are interacting. This is great. Marius, what's your sorry, there's so many coming in at the same. What's your strategy during bear markets? Thanks again. So we kind of talked a little bit about that. If you want to kind of do a little quick. No,
I don't think that my strategy changes that much. You know, I've already focused on conservative trades that you know provide a suitable risk reward, meaning that the premium that I'm selling is worth the risk that I'm taking. So, you know, if the market drops and we're in a bear market, you know, would I sell more bear call spreads? Yes, I would than bull put spreads, but you know, in general, I'm going to be doing more or less the same thing. I'm not an aggressive trader.
Very good. Okay, well, I think we're coming to an end here. Let's talk a little bit about maybe future projects that you have. I know that you're, I don't know if you wanted to bring that up yet, if you want to keep that as a surprise, but you did talk to me because obviously, like everybody else, is, you know, what's your plan? Tell us more about your plan and this and that. But I think you're going further than just sharing your plan because, you know, everybody has a different plan. Yeah. And you want to talk a little bit about that, or?
That's true. I think that part of the reason why, you know, I have a steady result in my trading is because of the trade plan that I have, and I call it a trade plan and manual because as much as if it's a trade plan, it's also a manual to confirm what I'm doing and how I'm doing it. So, you know, I'm from the medical device industry, and I provided devices in the USA, meaning that I was regulated under the FDA in Japan and Europe, and you have to follow a process, and I believe in that process, and I believe in documenting that process, even if it's for myself. And so therefore, you know, I have a very extensive document, you know, that it's on my desk all the time. It's 32 pages of everything I can think of to keep me out of trouble and to keep me making a nice small amount of money every month. And so I've been asked, you know, I talk about this plan, and people say, well, can you share it? And well, you know, I really can't because it's my plan. It's not your plan. But I am working on like a booklet. It's not a book, it's a booklet of how to write your own trading plan for options for selling premium. It's not designed for, you know, for you know, buyers for going long puts or calls. It's strictly focused on what I do and selling premium. So it's going to be probably another 6 months before I finish it. And I'm not going to, I don't have any plans to sell it. I am only going to, you know, give it away for free. So I'm not going to share my plan because it's my plan.
Right. I like
you need to write your plan because it's yours. It's, you know, if you write your own plan, you're going to live by it. If you just read my plan, you're going to say, oh, well, that's interesting. That's neat. I like that. I don't like this. So anyways, that's what I'm in the midst of.
There's a French expression, and I'm pretty sure it's all across the languages, but that you're not giving us the fish. You're going to teach us how to go fish, so that we become more independent. And I kind of like that. I kind of associate that.
And the two most important chapters of my plan: risk management, number one; trading psychology, number two. As you know, even if you're the calmest, most disciplined trader that ever was, controlling your thoughts and emotions and making decisions, especially at heightened times of volatility,
yes,
can, you know, is extremely important to know how to do that. And part of the answer how to do that is confidence. Write down what you should do it over and over. The more you know of what you should do, the more confidence you will have in doing it when the time comes.
Love it. So whenever that booklet is going to be ready, maybe we should meet again and talk about it if ever you want. I just
Sure.
wanna say, Bill, one of the key things that I see here, or that I benefited from, is all your knowledge that you have. But it's not just the knowledge; it's your generosity of wanting to share that knowledge, to share that. You know, I want to share the fact that you could make, everybody could make money by selling options. But on top, I don't have the knowledge that you have, and you are just giving that away, just educating people, and not just you. A lot of people that I interview, and I feel that it's very generous of you, and I just want to say thank you, because not only myself I'm benefiting from this, but I'm pretty sure there's a lot of people in my group and all other groups, and we're not in a competition here between groups. It's just a matter of learning, trying to understand, and make some money for by selling puts or calls. And I think that this is a great way to do it. And I just want to say an honest thank you for sharing that information and for being available to kind of share all that knowledge that you have. It's really, really appreciated from me, and I'm pretty sure it's appreciated from the group members as well. I think we went up to 35 at a certain point. So thank you for the members, and comment if you guys want to comment, or more questions, or if there's anybody else that wants to be interviewed, that wants to share some of the knowledge for all the other members. Feel free to reach out, and we could schedule some time as well. Take care, everybody, and have a good night, and happy trading for next week. Bye bye.